Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on 7/30/2014. Let me read this to you, then we'll take a look at the chart. The website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Well, today was one of those days where we saw a couple lines get bounced on, both positively and negatively, but we're kind of left with the close being essentially flat. We're left just sort of looking at it essentially where we were yesterday. Interesting to note that we did have this ascending wedge back in the middle of July that really started forming around the 17th and 18th. The deal with a wedge is that they tend to create, once they break, they tend to create a retest of levels that were in place prior to the starting of the formation of that wedge. So that means this pattern alone between these two gray lines could be expected to create a retest of something around 1957. Today's low was 1962. We ran into our ascending support line that created a bounce. So this line is validated. The fact that we broke this red line also seems to be validated, with the fact that that was where our rally after 2 o'clock, where our rally ended up putting on the brakes. Now, it is worth noting, however, that this red line is moving up at a pretty good clip. So if we were to, trade sideways for a little while, there is room for the S&P to still make significant gains while never getting above this red line again. Okay? And we've seen that happen many times. As a matter of fact, where we sit today at 1970 is underneath almost every broken rising support line that the markets have seen of any short-term or intermediate nature. We've got a few. We've got this little green one here. Okay, fine. We've got this one. That's perhaps a more important one to keep an eye on. And of course, the granddaddy of them all, at least in this bull market, is this blue one right here. Because this blue one pretty much, oops, that looks kind of funky. This blue one pretty much defines everything that has taken place over the last roughly 5 years and 4 months. So this one, if it were to break, that's the one where I would start to say, okay, everybody, take a good close look at this. Okay? Because we've got this line and this line, which define what? They make a very nicely defined wedge shape. So all I'm saying is that these longer term lines have not broken. This line right here has not broken. Okay? But these little short term ones that last weeks and months, a bunch of these have broken. For example, just to make it a little bit more clearer what I'm talking about, if we go back to the support line that we were looking at back in 2000 late 2012 and early 2013. That broke in June of 2013 when the S&P was in the low 1600s. And that certainly did not foretell doom. Likewise, this red line right here has broken. I don't think that necessarily foretells doom. At some point, this rising olive line right here could break. I would be more concerned about this one because this one has lasted for quite a while. We can even extend that back to for the entire year 2013, 2014 so far. If that one breaks, then I start thinking we need to keep an eye on this. But even then, we've got this long-term blue trend line that could give us support. So all of that to say, the fact that we're going sideways at this point is no big deal. You know, at this point, I'm just not that concerned about it. I do think we are right in the same position that we were in yesterday, even though we did see some continuation weakness underneath this red line. I am still looking at what has taken place over the last month as a sideways period of consolidation, and this is also a period of consolidation that could go either way. The degree of the move will be approximately the height of the pattern. So I think we would go back and measure the height right here. If we get above this line, then we are looking for an eventual move. Now, based upon the revised line right here, I think we could be looking at something in excess of that 2016 and looking at something more like 2022. But if we break down, then we are looking at a likely loss of approximately 135 to 140. No, that was way off. 35 to 40 points. So really what we're looking for on a move out of this pattern is it only implies about a 2% move. So if we break out over this line at about 1986 at some point down the road, we'd be looking at a target in the low 2020s. So guys, you know, I think this green line right here that I pointed out a couple days ago, I believe that is still a very good thing to keep our eyes on. It would be analogous to or a similar line to what we were looking for back in the earlier part of July when we had this line on the chart. It would be a similar situation. And I've just cleaned up some of these lines so the chart doesn't get so messed up. We had both of these lines on our chart with the idea that once we get over this one, we should see a rally. Once we get over this one, we should see a rally. And now I'm thinking, once we get over this one, we should see a rally. And that rally hopefully would take us over this 1986 resistance line and send us on up for a good faith effort at getting over 2,000 in the S&P. So guys, that's your video for July 30th, 2014. If we zoom in and look at this really closely, I don't think there's really that much more to be gained other than the fact that we see a cute little inverted head and shoulders pattern down here. But really the effect of that pattern and the target of that pattern, it's already done. You know, once we got over about 1968, we knew to expect a move to about 1973. big deal. It's tiny. It's minuscule. About the only other thing that we could throw up on the chart that might have a little bearing on things is let's put this little gray line right here, and let's make it a very light green. Okay, just saying, maybe this is a first indication of some upcoming strength, but I still think the real indicator is going to be interesting how often that works. I was just saying that I think it will be getting up over this line right here. And what I just remarked about the interesting feature is the fact that this line right here, when placed parallel to this dip we saw 3 days ago, lines up exactly with the low that we saw today. So let's keep an eye on a couple things here. This line is important because I think this would trigger about a 2% move. This line is also important because getting under it would likely trigger a 2% move to the downside. Getting over this line should be a precursor to a good challenge to 1986. So, guys, what can you say? We are sideways, and if you'll remember, there was a period back here from all the way from March until very late May where we were nothing but sideways. Are we now doing this, but maybe not quite as long and maybe not quite as volatile? It sort of looks that way. So, folks, I just want to thank you for watching the video. Thank you for your support. And let's see if we get a little more clarity throughout the rest of this week. Thanks for watching. Take care.